NIO's recent stock performance is making waves as it rides the electric vehicle highway toward its Q2 earnings. Hailing from China, NIO isn't just another name in the EV industry, it's a game changer. With wheels spinning and engines roaring, NIO has carved its mark as a prominent player in the world of electric vehicles. It's also a key contender on the road to a cleaner, more sustainable future. So, buckle up as we steer through NIO's remarkable journey, diving into its recent stock achievements and uncovering the latest price targets that are setting the stage for a dramatic Q2 earnings report. NIO's August journey in the stock market has been a roller coaster, marked by wild swings and a bearish trend. From a hopeful $14.64 at the beginning of the month, it swiftly descended to $10.67 by August 18th. What's causing this turbulence? Let's zoom in on the catalysts putting the pedal to the metal on NIO's stock ride. The global chip scarcity slams the brakes on the entire EV industry, and NIO isn't immune. Rivals like Rivian and XPeng are revving up the competition, making NIO's path a bit rockier. In addition, the anticipation and uncertainty around the impending Q2 earnings report have investors gripping the wheel a bit tighter. Among the analysts, a mix of opinions paints the forecast. So, let's take a closer look at these price targets and some stock predictions on NIO. Financial analyst Crispus Nyaga reports that NIO's stock price has recently taken a step back, mirroring the rising tensions between the US and China. Just around August 8th, the stock dipped to a low of $12.85, edging below this month's peak of $16.46. Still, it's keeping a healthy distance of around 80% above this year's lowest mark. The saga continues as concerns mount over the escalating US-China tensions. A fresh piece of news dropped. The US put the brakes on American investors diving into China's high-tech sectors like quantum computing and AI. But what's the twist? China's response and influence on players like NIO, XPeng, and Li Auto remain an enigma. The word on the street is that companies like NIO might escape unscathed, thanks to their sales being predominantly in China. There's more to NIO's story. Word has it that it recently secured a whopping $1 billion investment from Abu Dhabi, giving the stock another nudge. NIO's price is also dancing to the electric vehicle industry's rhythm. Tesla, for instance, made quite the scene, slashing Model Y prices in China by about 14,000 yuan, hoping to grip a bigger slice of the market. But the EV party in China seems to be slowing down as the economy takes a breather. In its monthly update, NIO celebrated a remarkable feat: 20,462 vehicles delivered in July, a jaw-dropping 103.6% leap compared to the same time last year. Sales? They shot up by a whopping 91% from the previous month. Holding their head high, NIO aims to roll out a whopping 250,000 vehicles this year, even after a slightly sleepy first half. As Crispus Nyaga surveys the scene, the daily chart sketches an exciting tale. Despite this recent dip, NIO's stock remains in the clouds, comfortably perched above the 200-day and 50-day moving averages. They're like old pals, those two averages, inching ever so close to creating what's known as a golden cross pattern when they intertwine. NIO's stock has taken a stroll back to the critical $13.16 support level, a peak back on January 24th. Market jargon calls it a break and retest pattern, often considered a flag for bullish times ahead. So, what's Crispus Nyaga's crystal ball reveal? A forecast that the shares might once again don their bullish coat in the days to come. And if the stars align, eyes will be locked onto the year-to-date high of $16.20. Meanwhile, over at Deutsche Bank, analyst Edison Yu sees a bright highway ahead for NIO. The latest delivery digits are rosy, signaling a potential powerhouse Q3. He's eyeing the freshly minted version of NIO's SUV, the ES6, as a major player in this game. With a hearty order book, Yu envisions a Q3 with over 60,000 deliveries in NIO's playbook. This isn't just a solo performance, though. Higher sales volumes and a firm grip on spending have you tweaking the numbers. He's cranking up the delivery forecast for 2023 by 10,000 units, now racing at 180,000. That's a sleek 47% leap from last year's stats. And let's talk about margins. They're getting their groove on, too, shimmying up by 40 basis points to a striking 7.4%. As for Q2's grand performance reveal, Yu anticipates revenue cruising at a solid $9.1 billion, in harmony with the consensus. But hold your horses, as margins sweat a bit under the spotlight. The vigorous promotion of fresh models is cranking up SG&A levels, adding a layer of complexity. Brace yourselves for a hefty loss of around -2.86 EPS and a dash of cash burn. No worries, though, the market seems to be nodding in understanding. Yu's lifting the curtain on NIO's potential and reimagining his price target from $13 to $17. Citi analyst Jeff Chung also chimed in on the NIO stock buzz, adding more fuel to the trading fire. In a recent message to his clients, Chung emphatically restated his buy endorsement for NIO stock. This daring move stands out in contrast to the collective hold sentiment held by 10 other analysts. But that's not all. Chung didn't just recycle old thoughts. He upgraded his price target for NIO stock from $13.90 per share to a more ambitious $19.20 per share. To paint a clearer picture, NIO's price crystal ball typically reads $13.28 per share, according to the crowd of analysts. Let's peek into the lines Chung penned for his clients, words that now buzz around the market like hot gossip shared with Street Insider. High risk got the boot in his assessment. Why? Because NIO's been around the track a while, flexing its muscles. With a potential annual sales volume dance of over 200,000 units, NIO's moves are becoming more predictable. And there's an air of newfound confidence in their corporate governance and growth story. News of Chung's words hit the market like a lightning bolt, sparking a surge in NIO's trading. Over 18 million shares changed hands. But keep in mind, that's still a bit shy of the daily dance of about 63 million shares. Furthermore, various analysts have reevaluated their stance on NIO, with the average one-year price target now dancing at $12.19 per share. This upward revision of 8.92% from the previous prediction of $11.19, dated back to July 5, 2023, sets the stage for intrigue. Picture this, a mosaic of targets provided by analysts, a puzzle revealing a range from a modest low of $6.77 to a soaring high of $22.16 per share. Amongst this spectrum, the average price target forms, hinting at a decrease of 20.34% from the closing price reported at a solid $15.30 per share. You see NIO's future sails through mixed waters. Analysts raise their forecast flags, pointing to the sky-high potential. Yet, shadows of caution are cast by challenges like competition and market volatility. The tussle between the bulls and bears reflects the intricacies of the stock market dance. So, which of these price targets do you think is etching the right path for NIO? Join the conversation in the comments below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more updates from NIO, I highly recommend watching this amazing video. Simply click this video right here. Thank you for tuning in and stay tuned for more exciting content in the future.